Good morning, Sumit sir.
Good morning, sir.
Good morning, sir. It seems that nobody's here, na? I'll put a message in the group so that
No problem.
Morning, Sumit.
Good morning, sir. Mr. Shiva, you're based from which part?
I'm in from Chennai, sir.
Okay. Sunil, how many participants we are expecting?
sir, there are 9 participants, sir.
So quorum 5 पे पूरा हो जाएगा. 50% is quorum mandation.
Yes, sir, yeah, right.
5 भी आ गया तो start कर.
We are expecting in 5 minutes, I think all will get joined.
Fine. Being a Sunday, it's difficult for participants. I understand early morning 9:30. Sunil, I think we got 8 participants, if I'm not wrong. If you can
Yes,
double-
sir. We have 10 participants over there, sir.
So I think we can start now.
Yeah, please, sir.
Good morning, everyone. I welcome you all to the third day of valuation session. One of the best thing you would have done in this period is to think for registering for this course. This, if you can also make me host so that I can mute or you can mute other members.
I think I'll just make you host, sir.
So please don't feel offended if I mute anybody. It is not for personal reasons. Let me flaunt my degrees. Now the only timing difference between you and me is registered value degree. So those who understand income tax AS 22, so this is a timing difference. It's not a permanent difference. But it will become permanent difference if you do not plan from today how you want to get this degree. Doing a course is separate, getting a degree is separate. I have seen from last 2018, 3 years, more than 5,000 students have taken sessions from me. At least 20% I know who have not even given exam in last 2 years. So the problem is you do a course 50 hours, but if you do not give exam, it will not add any value. So that is the ultimate aim. We should become registered valuer, and it is doable. A brief intro. I'm born brought up in Jaipur. I secured first position in CA Inter in CIRC region. Then I moved to Delhi for practice in 2003. Then I moved to Mumbai. I worked PwC for 5 years. And then the Satyam scandal happened. Then I moved to Middle East. So I worked in Middle East for 8 years, KPMG Bahrain and investment bank. There I get little bit flavor of what is valuation and Ind AS or IFRS. And 3 years back, I moved back to India and my hometown Jaipur. Now I'm mainly working in valuations and Ind AS, and very little on insolvency consultancy. Though I am insolvency professional, but I don't practice as a conscious call. And why I don't practice, that also share shortly. Now we all are interested in the new field, and this is an opportunity for early movers. So since it is just 2.5 years old and it is still evolving a lot, we have not even achieved 25% what it should be. To give you a classic example, this act came in 2013. Companies Act 2013 was amended, where the term registered valuer was introduced. When did the rules came? Any idea? Which
2017?
2017. So it took at least 4 years to get a rules. So we are talking in Act 2013, appoint a registered valuer. The rules came in 2017. Now, even though it is 2020 now, almost 7 years, we do not have a valuation standard approved by central government of India. What does the rule says? This valuation should be done as per standards approved by central government. And now it is 7 years now, no standard has come yet by central government. So still it is a very nascent stage, and we all can take a ride as of now, and early movers will always get advantage. If we talk of as of yesterday, we have total 3,314 registered valuers. 1,206 belongs to SFA asset class. That is what we are doing. 715 belongs to land and building, and 358 belongs to plant and machinery. Now there is another concept here, registered valuer entities. That means either I can practice in an individual capacity like Sumit Dhadda, registered valuer, or you can practice as a entity. So you, 2 or 3 people who are registered valuers, make an entity. It can be partnership firm, LLP, or it can be corporate structure, and then you can register as an entity and practice. Unlike our CA practice, where I can practice CA individually and simultaneously I can also become a partner in a CA firm. This is not allowed in IBBI. In IBBI, either you can practice on individual level or you can practice as a partner of a registered valuer entity. Now, can anybody give some light on why we are having majority of members working in individual capacity and not on entity concept? If you see entities, we are only 26, but if you see individuals, we are having almost 3,200 people working individually. Any thought process on this? If you can think of what could be the reason?
The fee for a registered value entity is very high compared to
Mr. Ashok, are you insolvency professional also?
No, sir. Only CA.
Okay. No, because those who are insolvency professionals, they give me this answer that the fees is high, but that is not the case. Because what happens in insolvency professional, you need to make 1 crore rupees entity. Then only you can become an insolvency professional entity. You cannot have, just a second, let me, there's some voice if I can control that. In registered valuer entity, you need to have, just a second. So in registered valuer entity, I need to have, I'm sorry, in insolvency, if I want to make an entity, I need to have a capital of 1 crore rupees. But that is not there in registered valuer entity. I can make 1 lakh rupees share capital, make a company and start that. But what is the problem? Why people are not coming more? And now I'll tell you what is going to happen in future. And in future, why people will work only in entities and not prefer in individual. Now, the reason why people do not prefer to join entity because of the valuation rules. What is written into the rules? In the rules, they have mentioned that if you are a partnership firm or a LLP and one partner who has signed a valuation report, he made an error in the report. In that case, all the partners will be liable jointly and severally. Now, this clause, which puts limitation that error has been done by my partner, then why are you penalizing me and the firm? So that concept got little bit scary, and that is the reason a lot of people are trying to avoid partnerships. But why in future only partnerships will work out, or LLP or corporate structure, that I will tell you shortly. Now, next slide is not to scare you at all, but this is just to give you a background and updates. So do not get scared after seeing the slide. Now, this is a synopsis of past percentages of SFA exam every quarter on quarter, published by IBBI on every quarter. So if you see from March 2018 to March 2020, generally the passing percentage is 14 to 15%. Now, if you tell any CA student that passing percentage is in double digits, he will be very happy, because we know when we did CA, it was in single digit passing. So double digit is still a positive sign to see. But now, what happened in April to June, that passing percentage went from 99 candidates, only 6 have passed. So it is drastically reduced from 14% to 6%. Anybody have any thoughts? What would have happened that the percentage went so steep?
Any change in syllabus? You are not ready to get into it, is it?
So there are two reasons. One, what happened in April and May, entire country was in lockdown. So no exams happened in April and May. So the problem came, the people who have studied in February, January, February, March, they were not able to give exam in April and May, and suddenly the course changed. So when they studied on an old syllabus. They were not aware of updated syllabus. And IBBA changed syllabus from 1st June. So what happens when the syllabus change? There is a shift in a pattern of questions, shift in a kind of questions are coming. So question bank got changed. So various new questions came, which people have no idea. And that is the reason. Excuse me. So what happened? The question bank changed. People were not aware, and that caused little bit fall in steep. Am I trying to say that exam is very tough? My answer is no. I'm not trying to say exam is tough, but I'm trying to put emphasis here that exam is tricky. It's not tough, it's tricky. At times you think that you know the answer, and that is the biggest mistake we do, because if you have an old understanding, you do not update it due to change in law, your answer will always go wrong in exam, and which we will discuss during the day. Now, how many of us are here, if you can put by chat or let me know, who have no idea of valuation? They are just very basics, have no previous background, just doing the course first time, have no idea, amateurs, because there will be some people who are experts and there will be some people who are doing first time. So if you can let me know, so I'll get an idea and then I can proceed during the day. So we have one who says these basics. So rest, those who will not respond, I will assume they are experts. So I can ask questions from them only. Whenever I say I will ask questions, people admit, no, we are doing basics, so I will not ask questions to them. No, on a lighter note. Now, what is the irony? The irony of this exam is those who are experts in valuation, they are taking minimum 4 attempts to pass. Those who are experts in valuation. But those who are basics in valuation, you may like to laugh on the fact they clear exam in first or second attempt. Now you will say, I'm making a bizarre statement. How it can happen? The person who is expert, he is taking 4 attempts, and person who is immature or very basics, he is clearing 1 or 2 attempts. I'll just tell you why. Now, one gentleman in Coimbatore, 60 plus age, he passed in first attempt. He had no idea of FM because when he became CA at 1970s or 80s, there was no FM in the syllabus. But his concept, knowledge of laws, income tax, IBC, and economics was very strong. If you see the syllabus, your syllabus is not fully on valuation based. Your syllabus is more on other laws. So if your other laws part is good, you can still survive. Another gentleman, 3 years of practice, CS practice, and we need to understand there is a difference between curriculum of CA and CS. CS are not more inclined on FM, but still he secured 75%. But he had no background of FM. But now the important thing which I want you to put and see, this gentleman clear exam with 80 marks. Now what the next message he's saying is very relevant. But I must say, many questions were absurd. So why IBB is asking absurd question? Because first, the syllabus is absurd. So they are asking absurd questions. Now, besides studies, your general awareness, ability to guess counts. And that is most important. If you have analytical acumen strongly, at times you can know the answer. Because question will come as basics as you can think. So we need to go on basics. And one thing I can guarantee. So on a jokingly, I always say, this exams look like this. So they ask a question which you think all are correct answers, but only the IBBA know what is the correct answer. But one thing I can guarantee, all professionals are sitting on 55 marks on day one. If you want to give exam tomorrow, I can bet 55 marks you can easily get. That's not a problem. But what is the problem? To cross the bridge from 55 to 60, you need to put some effort. Let's attempt a basic question which come in exam. Now this question sounds as basic as it can be. Everybody would have read this in 11th or 12th or BCom or CACS foundation. So there are 4 options A, B, C, D. If you can put in chat or speak.
C.
Okay. I think there are a lot of noises coming. So if you can use chat, if it is okay with you, then chat would be easy. For me, it would be easy to track down. And here you don't get negative marking. So no, you should not think in not answering. So everyone should answer. So we got, out of 10 participants, we got 3 attempts. What about remaining? And it is better to make mistakes here than rather to make mistakes in exam. Now, whenever a question comes like this, everybody would have been aware on this, but our basics may not be revisited. So A and D can never be the answer. Why D cannot be the answer? Because every account will have any of the three natures. Remember the golden rules we read? Debit what comes in, credit what goes out, debit the receiver, credit the giver. So A is only for income and expenses. A will never be for balance sheet items. So A is ruled out and D is ruled out. Choice lies between B and C. So the correct answer is, which most of you have given, it is a personal account. That is a correct answer. Now in exam at times they are asking another basic question. What is the peculiar feature of nominal account? So which is a very simple conceptual question. The peculiar feature of nominal account is they do not have a carry forward balance. When you will see the answers, you will definitely get the answer. But they are asking as simple question as it can be, and they are asking some typical questions as it can be. Quickly answer this one. Now, what happens in this question? Since our inception, we were taught A and D will not be the answer for a simple reason. Why they will not be the answer? Because the question is talking redeemable shares issued by a company. So it is showing that I am issuing. So in my balance sheet, what it should be. So we are not talking from the holder's perspective. We are talking from the issuer's perspective. Fine. Now, since inception, we were taught that preference shares are part of equity share capital. But now, answer gets changed to liability, because if you are updated on Ind AS, you will realize in Ind AS the concept got changed, that if it is a redeemable preference share, it will be considered as a liability, because Ind AS works on a fundamental principle. What is the difference between equity and liability? In equity, you don't have a compulsion to pay, and in liability, you don't have a choice, you need to pay. So if it is a redeemable, a company needs to pay after some period of time. So those who are updated on Ind AS, it will be easy for them. But if you are not aware of Ind AS concept, it will be a little bit tough, because now in your syllabus you have 5 marks of Ind AS. You don't need to be Ind AS expert, but basics of Ind AS, what these 5 standards are with you. So if you are aware on that, you will be more through. So this is your entire syllabus. I'm sure most of you would have been aware of the syllabus now. Any idea how much practical questions will come in exam out of 100 marks, where you do actual number crunching? Approximately.
Three or four?
3 or 4 marks only?
The questions, I'm saying questions.
No. I'm saying marks wise. So out of 100 marks, how much marks, let's say 10, 20, 30, 40, 50, where I need to do actual financial calculations? Approximately.
Maybe 8 to 10, 10 around 10.
Around 10.
10.
25
Okay.
marks, 20
25
marks, 20, 25.
So the range is 20 minimum, 25 maximum. So that is the actual percentage. From 20 to 25, you will get practical questions. So what does that mean? Still 75 will be pure theory. And even they will ask theory questions for financial management concepts. So let's say Black-Scholes model, which is one of the most complex model. They will not ask practical questions on Black-Scholes model, because it is not possible in exam to solve Black-Scholes model. So they may ask theory questions on Black-Scholes model. So we need to be clear on theory. And if you see the syllabus, economics purely theory, financial statements purely theory, They will just ask fundamental questions, which we will discuss around after 11 o'clock approximately. Business ethics and professional ethics, purely theory. This 4 marks, I say it's a low hanging fruit. You have to just need the valuation rules thoroughly. If you are clear on valuation rules, you will get these marks easy. Again, general laws, 18 marks, purely theory. You have Companies Act, Income Tax, RBI, FEMA, IBC, SURFACE. No manual calculation, just basic understanding of law. And they're asking simple questions on IBC. So even if you're not IP professional, you can still get marks in these. Index 5 marks, purely theory. Overview of valuation, purely theory. Valuation approaches, purely theory. Now this valuation application of 35 marks, it will be a little bit challenging for you. And why it will be challenging? Because this consists of some technical FM concepts. Out of this 35, the thing which will bother you more would be options and fixed income security. So at least these two concepts, if you can get mastery, exam will be a cakewalk. But if you do not pay attention on options and fixed income, then it will be a challenge, because minimum 5 to 7 marks will come calculation from options and fixed income. So that we need to put efforts. Judicial pronouncements on valuation, 2 marks is cakewalk. There are only 6 cases and 6 fundamentals. If you are aware, you can easily get these marks. Out of case studies of 20 marks, 12 to 15 might be a practical, and remaining 7 or 8 would be theory questions in case studies. So that is not to be scared of. And if anybody who is not strong on FM, and आप भी मेरी जैसे रट के पास हुए हैं, तो for you, go to a website called Investopedia. This Investopedia website will make any complex jargon into very simple understanding approach. So suppose if you're not clear on option valuation, so just Google on Investopedia. It will be in a very basic plain language. So you will be able to go through it very well. An exam, the biggest challenge is negative marking. And in last 3 years, I would have seen more than 500 to 1000 students between that were failing at 59.75. And the only reason people just flick at near borderline, because at times a question comes which you think you know it is correct, but then things got changed and the question got difficult. If you can give me a background, what was covered in last 2 days, so I can also do a brush up of some questions which have changed on the topic. Like what topics would have covered in last 2 days, if you can give me an idea. Anybody can let me know what topics you all have covered.
Are some acts we studied yesterday, like RBI Act,
Okay.
SURFACE Act, and FEMA rules.
Okay. Okay. So let me ask one question on FEMA rules. And those who are company secretaries, they should not answer if we have company secretaries in the group, because they always know the answers of compliances at least. Within how many days of receiving foreign funds, share capital needs to be allotted? 30, 60, 90, 180 days under FEMA regulations.
60 days.
Anybody with a different answer? 30, 60, 90, 180 days. And we are talking under FEMA regulations. Anybody has a different answer, or we assume all have a answer of 60? If you all will not respond, then how will we move ahead? So now the correct answer is 60 days. But in exam, a lot of people choose 180 days. Why they choose 180?
It's old.
Because old regulation was 180 days. So if you are not updated on the new changes, they're asking simple question. So we need to be very aware of what has been changed, because they will not ask tough questions on they will not ask tough questions, but they will ask very basic fundamental questions.
Sir, I have a doubt in this.
Please.
Hello, sir.
I think your voice is some issue in your audio. Either too much noise coming from the back.
Is it audible, sir? Is it audible?
You can attempt.
Sir, is it audible now?
Not clear, but still you can ask.
Sir, my question is, till what date we have to update ourselves for this forthcoming exam?
First February.
Okay, but this regulation of 60 days has come recently in the month of July.
July, which July?
July 2020.
Pakka?
No. It was before that. It was in 2000. It was in 2018, 18 or 17. Yeah,
17. 2017 it came.
Yeah.
That's why I'm surprised how he's saying that this regulation came in July 2020, because due to COVID, government was not working. So it did not came in July 20. It came in 2017.
Yeah.
So I think partially for listed companies it came in 17, and for other companies something like that it happened in the master circular I gone through. But anyways, I will recheck that. But according to you, up to February we have to.
Just a second. There are 2-3 mics probably open. Yeah. If you can now, who was asking the question, please unmute yourself and ask, because there are 2-3 mics opening, so we are not able to hear. Now you can ask who was asking. So the question which we discussed was from 1st February 2020 till that, whatever updates come, that will be relevant for your exam. So for example, in IBC, substantial changes happened in March and April that will not be relevant for your exam purpose. So anybody can tell me what is a substantial change happened in IBC in March or April? The biggest substantial change. I am not sure, did IBC was covered or not?
1 lakh to 1 crore limit.
So in exam, answer will be 1 lakh only. You will not say 1 crore limit in exam, because it got changed in April. But for exam purpose, it will be 1 lakh only. Okay. So we need to be careful whatever has been coming till 1st of February. And this FEMA regulation of 60 days was updated in 2017 for all companies. And RBI was very lenient, because when this regulation came, a lot of professionals were not aware that rules got changed and they missed filing in 60 days. So we also missed that in 2017 in one of our clients. So in our firm, we missed in filing 180 days. So RBI sent a letter to us that you are not compliant. So our company responded that we were aware it is 180 days. This change of 60 days was not publicized properly. So RBI did not put any fine on us. So it was lenient. But now it is mandatory 60 days. So we'll go through basics and then come to financial statement analysis. So now we all know that 2017 valuation rules came. IBBI is the authority who regulates RVOs and RV. And IBBI call themselves as a temporary regulator, because now once the new bill gets passed, the power of IBBI will move to National Institute of Valuers, a new institute proposed. It may pass in next 6 months. It may pass in next 2 years. We don't know. Depends on how much time government takes to finalize the new act, but it will eventually happen. We have 3 asset classes in IBBI: SFA, for which we are studying plant and machinery and land and building. Only CA, CS, ICWA, and MBA can do a SFA registration. Now, if we understand these are the three asset class, who will value inventory? Which asset class will value inventory? So out of three asset class, somebody need to value inventory. And this question will come when you all become registered valuers and you are getting assignments of insolvency professionals. So in IBC, we need to do a valuation. So any idea? Inventory should be done by which asset class? You have only three choices, so it's not that tough to choose any asset class.
SFA.
SFA. Now, this question was raised so many times to IBBI that who should value inventory. So IBBI has given a very clear view on this. They say, first you need to see what is the nature of inventory. For example, if you are valuing a real estate company and their inventory is land and building, then that will be done by land and building. It is common sense. When it is a machinery is inventory, let's say technical machines they're making, then it will be done by plant and machinery. Now what they say, apart from specific nature of land and building and plant and machinery, whatever else is remaining, it goes to SFA asset. That's a general description they have given. And what is the problem of this classification? At times when IBC assignment comes, IP gives the inventory valuation to plant and machinery, because then your fees decides on what is the scope of work. So both the SFA and plant and machinery try to claim inventory, and it depends on IP whom he wants to allot. So whenever you take IBC engagements in future, once you become registered valuer, you just need to ensure where the plant is located or where the inventory is located. Why this is important? In the IBC rules, it is written that the valuer has to physically visit the premises and value the inventory. Whereas for all other SFA asset class, you can sit in your office and do a valuation. You don't need to even go to the client's place. So I would have done 40 plus IBC cases. We never went to client place till date, because all data can come on your office. Now, who will value diamonds? Suppose you are valuing a real estate company and you are having a diamond as asset class. Who will value that? Any idea? Out of three asset class, who will value diamonds? I know it's.
Can you repeat the question, sir?
So we are valuing a jewelry company, and they have inventory as a diamonds. So who will value the diamonds? Which asset class will value?
Plant and machinery, security.
Now, as I told you, the nature does not fit to plant and machinery or does not fit to land and building. So it goes to a residual category, that is SFA. Now, do SFA valuer have the capability to value? At least male valuers may not have the capability to value diamonds. Female valuer may have the inborn skill to value diamonds, but at least I cannot do that, right? I can only know the cost, but I may not know the value of a diamond. Then what should we need to do? Then I need to appoint somebody who is expert in the field, registered with either income tax or customs or wealth tax. I should give him engagement, take his report, and give a valuation accordingly. So this is a process generally followed. Now my pertinent question is, what if the valuer whom I appointed goofed up and gave me a wrong report? Then am I responsible for that error, or I can give a disclaimer that this value is not based on my technical skill, so I will not be responsible, and the jewelry valuer will be responsible. What is your view? The mistake is done by jewelry valuer. I've included that report in that value in my report. Am I responsible? Yes, no, maybe. Now, what happened after 2017? The rules came. Before that, it was allowed that you can always give a disclaimer that this area you do not know, it is not your cup of tea, so you should not be held responsible. But after 2017, the valuation rule specifies now you cannot give any disclaimer, and now if you have included any report, you and the other valuer will be jointly liable. So you cannot disclaim your liabilities now onwards. So that is a tough part for valuers. That if I'm appointing others, I need to ensure they fit the qualification criteria properly. So right now we have 14 RVOs. Anyone can register with any RVO. All RVOs have equal standing. If you see, till 2018, there were 11 RVOs. No RVO came 2019. And suddenly in lockdown period, 3 RVOs opened up, and IBBI granted permission to 3 more RVOs. So any RVO, you can become a member. Now to open a RVO, you need Section 8 company. If anybody has to ask questions, then please ask questions. But if the mic is creating noise, so I'll try to unmute. Now to an exam question comes, to open a RVO, what is the nature of entity you need to create? So earlier in the rules, it was written, you can open a charitable trust, NGO, Section 8 companies. Now it has been made mandatory that it will be only Section 8 company. Now, if I want to create an RVO, I need to have a Section 8 company. But earlier, anybody can make a trust, NGO, and that would work out. But that has changed. Now, each RVO need to have independent directors in majority, and majority would be resident directors. Now, which are the 4 committees which are mandatory in RVO? If you have aware of rules, it is written in the regulations that there are 4 committees which are mandatory. Can you let me know which are those committees which are mandatory as per valuation rules for each RVO to form? And in an exam, they ask such a basic questions on RVOs, which are mandatory committees, which are optional committee. So anybody can throw any light on any committee which is mandatory?
Advisory committee, maybe.
Oh, that is the optional committee. So advisory committee is the 5th committee, which is an optional committee, which is not mandatory committee. Now, what are those mandatory then? Remaining 4? Anybody else can think of? Audit committee is not a committee. And why audit committee is not a committee? Because it is a Section 8 company, non-profit organizations. So they don't put audit committee under valuation rules. So now you have still 4 committees left. If you can think, you will get an answer. The point is, one need to think. And if you think, you will get an answer for sure. Absolutely. One is disciplinary committee. One would be membership committee. Then there are 2 left. Memberships are related. What will be another committee? So there are 4 committees. One is membership committee. So one, after making memberships, what is the job of RVO? To monitor the members also. So second is a monitoring committee. Third, then there would be grievances against the members. Then third would be grievance redressal committee. And the last would be disciplinary committee. So these are 4 committees. So once you read the rules, try to know the compositions also, because in the rules it is written that for grievance committee, you need to have minimum 3 members. For disciplinary committee, you need to have minimum 1 member from IBBI. For membership and monitoring, they have not mentioned anything. But for these two, they have asked. So in exam, they ask basic questions that in which committee IBBI member is mandatory. So it will be disciplinary committee. So read the committee's composition thoroughly, and these all will be covered under valuation rules. So a job of a RVO would be, you need to register members, give them 50 hours training, and then the members will give examination conducted by IBBI. After that, you clear the exam, register with IBBI, and then you need to also do 1-day training to take the COP. It is just like taking a membership separately and taking certificate of practice to act as a registered valuer separately. So it will be 1-day training. Now we need valuation for all practical purpose. You do M&A, investments, fundraising, sales of business, dispute resolution. We need a valuation. Regulatory, if you go, Companies Act and IBC, mandatory required registered valuer. Income tax, SEBI, RBI, they do not mandate registered valuer as of now, and that is becoming a challenge. And what is the challenge? The biggest challenge is, if a company wants to issue a shares at a premium, and the premium is calculated by using discounted cash flow approach, in that case, I need 2 valuation reports. One from registered valuer under Companies Act, and one from merchant banker under Income Tax Act. Now it becomes very difficult to explain to client that for one transaction of issuing shares, you need to have 2 different reports, because both the professional will charge fees. Nobody will do it for free, and client does not like paying fees, and it is also not logically also. So that becomes a lot of problem. Apart from that, what is the biggest problem? The biggest problem is, a registered valuer will issue a different report, and merchant banker will issue a different report. Will their value come same, or it will be different? Their value may not be same, because you both are different individuals, both have a different assumptions of valuations. Now then what happen, practical problem, RV will give a value 100, merchant banker will give value of either 105 or 95, whatever it may come. Then client becomes in a problem that for what value should I issue shares? So practically what is happening in industry, client will go to either a merchant banker or he will go to a registered valuer. He will say, this is the assignment. You find another MB who issue a report nearby your valuation report and vice versa. Then only I will give you assignment. This is what practically they are trying to resolve. So a lot of representation has been issued by ICI to MCA and income tax authorities that at least accept the reports issued by those chartered accountants who have also become registered valuer in lieu of merchant banker, so that the client will not be harassed. It is almost 1 year now that application was sent, but no revert came by income tax authority yet. But in future something may happen, which I will share also to shortly, that may change. Now for Ind AS, there are 2 mixed views in the industry. If the client auditors are Big Four, they mandate that all valuation under Ind AS should be done by registered valuer only. But if the auditors are not strong, they are saying that the valuation can be done by any chartered accountant under Ind AS, and we take it. Where we require in Ind AS, if any company has invested in unquoted shares, then every year for reporting purpose, you need to have a fair value. So who can give this fair value? So normally earlier management and CA used to give it, but now auditors are insisting that it should be done by only registered valuer. But again, this is a very good area of practice. And if anyone of you deal with Ind AS companies, this year, majority of registered valuers were busy in April to June when every country was in lockdown. They were full with work because of impairment testing. So in Ind AS, we have a concept of Ind AS 36, where we need to do a impairment testing of assets. So all Big Four auditors have requested. Ask, sir.
Sir, I have a question. Like you said, ki the chartered accountants, the registered valuer can do the valuation of the assets. But as far as the registered valuer norms are concerned, classification has been done on 3 bases: land and building, plant and machinery, and financial assets. I understand from the rules that the financial assets are the only asset which a chartered accountant can do it. So how these people, chartered accountants, can become a registered valuer of land and building and plant and machinery?
No, they cannot become.
Yeah, because you said that they would be busy in valuing fair valuation of assets.
Yes,
So
assets.
like major assets are land and building, plant and machinery. Stock is always at cost price.
Yes.
So I don't think so very big work is going to come for a CA, especially when he completes a valuer course in the Ind AS part.
No, who said that land and building will be only valued by land building valuer for impairment testing? So impairment testing, you don't do the fair value of land. In impairment testing, you do a cash flow discounting, that how much cash flows will come. So there is no necessity of land and building valuer, because what you're trying to find the recoverable value or the value in use, not by selling. If you're using selling fair value cost to sell, then you need to have a land and building and plant and machinery valuer.
Correct.
But what does the standard says? If my value in use is already higher than the carrying cost, then I will never go for fair value less cost to sell. I don't need to even go for that approach.
Of course, but the thing is, the Ind AS does not say it has to be separately valued by a independent person.
So that's what I'm saying. Wherever the auditors are Big Four, they have insisted that it should be done by only registered valuer. Because why? What is their logic?
Yeah.
Ind AS comes under Companies Act 133 rules.
Yeah.
Section. What does Section 247 says of registered valuer? It says that wherever any property, asset, security, investment, or any other asset, so it's a very blanket definition, it's a very broad definition, or any other asset, if it needs to be valued, it should be valued by a registered valuer. That's what Section 247 says.
Correct.
Now, a lot of people have taken a very strict interpretation that it means that if you are valuing for Ind AS purpose, that comes under Companies Act. So for that also we need to have a registered valuer mandatory. But at times client does not understand this. Client says, for compliance purpose, why should I pay fees to registered valuer? Because suppose if you are have a company who has invested in a unquoted shares. So just for reporting purpose, if you ask me to get a valuation done from a registered valuer, then what value the company is driving? He's saying, I'm not selling the transaction. If I sell the shares, you can tell me, okay, you are making money out of it, so get a registration done. That is not happening. Just because your Ind AS says put it at fair value, you are putting a pressure on me to get a valuation done by registered valuer. So I've given a very simple example of one share. There are companies who would have invested in 100 unquoted shares. 100 companies, we are talking of small startup investments. Then who should do a value? So practically what is happening, there are two different views happening. Big Fours have mandatory insisted that you should be registered valuer. Take another classic example. For impairment testing, The standard does not say get a valuation done by registered valuer, nor even a chartered accountant.
Correct.
Even a management can
Management
make
can do it.
assessment. He can do it. I agree.
Correct.
But what happens practically? Auditor says, I do not have a comfort with management because you can manipulate the numbers. So I want an independent party to give a report so that I can safeguard myself that I relied on an independent RV report and he has given that there is no impairment testing. So it is just
Sir,
we are pushing the cost. We are pushing the cost. I agree. I'm not saying it is mandatory.
Sir,
But
in this case, I would like to say one thing. Ultimately, the registered valuer who is going to value my impairment, he is relying on the cash flow submitted by the management only.
Absolutely. I'm not denying on that. The only thing I can play, what is the discount rate I'm taking? That is the only thing in my hand. Because we recently did, again, I cannot take the name due to confidentiality reasons. We did one of the listed companies valuation. And every third day, when we show an impairment number, they keep changing the projections. Now, what can I do as a valuer? If you say my first accountant has given a wrong projections, take a new projection. So I cannot say, no, your file is wrong. So whatever a client is giving, I take that. But then I can only play with my discount rate. That is the only thing which we used to do. So that is practically, it's a difficult. I agree.
Yeah. But barring impairment, sir, barring impairment thing, I don't find any other option wherein a CA can pitch in and do the valuation for assets and liability under the Companies Act.
Only for unquoted shares.
Yeah,
Unquoted shares.
unquoted share is okay.
That is
Investment.
yeah. Otherwise, there is no.
There
is no. In India, there is no.
Yeah.
Only in M&A and other activities you can do. Otherwise,
Correct.
no.
Otherwise, no.
Yeah.
Thank you.
Now, also, lot of NBFCs, when we are talking big NBFCs, who buy loan portfolios or sell loan portfolios, quarterly, their valuation report is also taken by registered valuer. Because Ind AS 109 says, fair value the portfolio. So suppose I have 1,000 portfolio customers, I'm selling to another NBFC or vice versa. That valuation is also taken by registered valuers. This started last year of late. That's is the area.
Yes, financial assets, I agree. Totally agree
Yeah.
that financial assets are under the forte of the CA.
Yes.
But apart from financial asset, I don't think any other asset in the balance sheet would come under the CA forte.
Yeah, directly it will not come. Directly.
Yeah. Thank you.
Agree.
Thank you.
Okay. So now fair value ESOPs. ESOPs is again an issue where you'll get a lot of assignments. Whenever a company issue ESOP, you need two valuation reports. One valuation report at the time of grant of ESOPs. So today company will make a ESOP plan. We are making a distribution. Then you need a valuation of a registered valuer. And after 3 years, when the exercise date will come, at that time, you need a valuation from merchant banker mandatory. Because after 3 years, as per income tax perquisite rules, it can be only valued by merchant banker. So you need two valuations at the start and at the end of exercise. So we always say valuation is needed because it is better to be roughly right than precisely wrong. Based on our valuation, it does not mean that all transactions will happen. My valuation just give them a benchmark number for negotiation purpose. If I say I've given a value 100, that does not mean transaction will happen only at 100. Transaction may happen at 120, may happen at 80. It depends on the buyer and seller negotiation skills. Who can see more value in exiting or entering? It's their choice. Now, 2017 onwards, there are so many confusion happen in industry because earlier chartered accountant certificate was valid in all laws. If I'm issuing a shares to NRI, that will work in income tax, Companies Act, and RBI and FEMA regulations also. But after registered value rules, their change happened. Now for income tax, CA certificate and MBA works out. For Companies Act, only registered valuer works out. For IBC, only registered valuer. For other acts, things are coming in place. Now, if two shareholders are selling their shares, do we need a valuation certificate from a registered valuer? Yes, no, maybe. What is your view? So two shareholders are selling shares of a private limited company. A and B are selling among themselves. Do I need a registered valuer certificate in Companies Act? Yes, no, maybe. Anybody can also put in chat.
As of now, it is not mandatory.
So law does not require a certificate of a registered valuer for this transaction for a simple reason. The money is not coming to the company. It is moving between two shareholders' pocket. So company is not getting impacted at all. So you don't need to have a registered valuer certificate. Ironically, you also don't need a certificate under Income Tax Act also. Because if there are two shareholders selling, Income Tax says follow Rule 11 UA. It does not say take a certificate. You need a certificate from a CA or a merchant banker only when you are issuing shares. So if a company is issuing shares, then you need a certificate, either by a cost method or income approach. Unfortunately, what happened before 24 May 2018, all chartered accountants have a power to value DCF approach also. But from 2018 May, for whatever reasons best known to the income tax department, they removed the word chartered accountant from that section 11 UA and removed the word. And now they say only the merchant banker can do a valuation of income approach method. So that becomes a little bit tough for us because earlier everybody has this right. Now they removed the right. This question was asked many times to them that why you removed CA. They do not have any answer on that. So that is all.
I have one observation, Jason.
Please, sir.
I think regarding the unlisted shares, I think there one exception where valuation will be required is that of a foreign company. Suppose one Indian company is invested in a foreign company and that company sells the shares to another Indian party, of the overseas entity. RBI mandates
mandatory.
That's
In
exception.
FEMA regulation, yes, in FEMA regulation it is mandatory 100%. In income tax, it is exempted because suppose if I am issuing, let's say, 100 rupees shares at 500 rupees. So in income tax, section 56 give exemption that if you are issuing shares to resident, then only I need a valuation report. But if you are issuing to non-resident, I don't need it. So income tax, you are out. But in FEMA mandatory, you need to have a valuation certificate, mandatory. And FEMA is again a huge opportunity because a lot of startups which are issued these days, working these days, they get some or the other foreign funding. So a lot of valuation certificates, I know a lot of Bangalore and Hyderabad chartered accountants are busy only for FEMA compliances because huge money is coming for startups. So even if somebody is putting 10 lakh rupees, you need to issue a certificate because there is no exemption for the amount of investment. Startups only have exemption under income tax. If you're a recognized startup, you don't need a income tax certificate. Income tax gives you exemption for 3 years. Now, valuation rules came from February 2019. From February 2019, any valuation which will be done in Companies Act will be done only by registered valuer. In IBC, it will be done only by registered valuer. And if anybody use IP, recently last week, IBBA penalized one insolvency professional for 3 months debarred because he did not appointed registered land and valuer of IBBI. He appointed somebody from the bank panel who was a bank panel of valuation. So IBBA is very strict. So IBBA says now only registered valuer should be appointed. Section 247, you all are aware? I'm sure by now you should be aware of section 247. Even if you're lightly aware, before going for exam, read section 247 thoroughly. At least 1 mark question comes from that. So can you tell me under which chapter number Section 247 is there of Companies Act. And they ask such absurd questions. It is a memory-based question. So under which, because is it relevant to know which chapter? Personally, it is not relevant to me. But IBB is asking such question. So I'll give you 4 options. 15, 16, 17, 18.
18.
Which chapter? Ashok, what do you mention?
18.
18 is a sweet age, but answer is 17. So write down by in Roman numbers. Don't write 1, 7. Write Roman number X, V, and 2 I's. So in exam, that will come in Roman numbers. So section 247 is very basic plain section, which you all should aware. Again, a very simple question comes in exam, and I'm sure you should not go wrong on this. Nobody should go wrong on this at least. Quickly answer.
Audit committee.
This is the only section. Board. Common sense says board, right? How can audit committee be more powerful than the board? That's the common sense says. But our common sense goes for a toss if you have not read section 247. This is the only section in Companies Act where audit committee is more powerful than the board. And what does the section says? Audit committee has the power to appoint registered valuer. And in case, in absence of audit committee, power goes to the board. So answer would be audit committee, because they have the first power. And if you don't have audit committee, then it goes to the board. So read 247 thoroughly. Question comes on 247 like, who appoints RV? That is audit committee. Under what chapter it comes? It is 17. How long RV should not be associated with the company pre and post? Any idea? Suppose if I am an auditor of a company, how long I cannot do a valuation of that? 3 years post and 3 years pre. It's 3 both. If you see the first draft which came of valuation rules, it says never before, never again. That means he should never be related at all. But then people objected that it is absurd rule. So they changed the rule. So what does it means now? If I am a stat auditor, GST, income tax, company secretary, compliance auditor, then for last 3 years and for next 3 years, I cannot take the valuation. Or if I have taken a valuation today, then for next 3 years, I cannot be appointed as a valuer, valuer. If I have taken a valuation today, I cannot be appointed as an auditor, income tax, GST for next 3 years. I can do valuations every quarter, that is not a bar, but I cannot have other relationships. Question comes on penalties for non-compliance. What is the minimum penalty for non-compliance? So chapter 247 talks about, chapter 17 talks about registered valuer. And this chapter 17 has only one section, 247. And for us, our bread and butter comes in this section. So we need to know this section thoroughly. So this section talks, wherever you need to do a valuation, if you read the section, it is a very broad definition. It says where valuation required in respect of property, stock, shares, debentures, security, goodwill, it should be done by registered valuer. I'm not sure if anybody's want to ask question, you can ask question, but just I was getting noise, so I was removed. Now it also talks about that before 3 years, pre and post, you cannot have a direct or indirect interest. That is a check we need to follow. Penalties are, if you done an error without intention to defraud, it will go between 25 to 1 lakh. But if your intention is to defraud, it goes from 1 lakh to 5 lakh rupees and jail term up to 1 year.
I have one question.
Please, sir.
The interest Does it include an employment in a company?
Yes, absolutely.
Okay. Okay.
It is in the rules also, it is defined that you should not have been an employee or related to that valuation
Okay.
rules.
Okay. Thank you.
Apart from that, any idea what is the maximum jail term would have been given in this regulation? Maximum jail term you can think. So if somebody voluntarily want to do a fraud, so how much jail term would have been kept in the provision approximately? Any idea? Maximum jail term?
5 years.
Double it, 10 years. So section 448 says if it is proven that you collided with the management, you did a fraud to damage the shareholders, especially minority shareholders, at 10 years, it is up to rigorous imprisonment of 10 years, which is a very harsh section, section 448. So that is the reason they say the damages are unlimited now. So go through section 247 thoroughly. Is price equals to value?
No.
Or is value equals to price?
No.
Because if the answer to first question is no, second question has to be no, because I just shifted LHS equal to RHS. So there is nothing fundamentally changed. What is our problem? We are always focused on value, and that is our job. Client is interested in value or he is interested in a price. And most of the times, client will come with a predetermined price to you and say, this is a transaction. I want a valuation of this amount. So this puts you in a trouble because client expectation is a particular price which is set in mind. And our problem is I have to follow the standards, international valuation standards or ICA valuation standards. If by following the standards, I'm not able to meet the price, client will go to some other professional. He will not stick with me. And that is the biggest challenge you will face in our practice. My one free cent of advice would be, whenever you're doing a valuation assignments, take some sort of advance fee. So client will not run away unnecessary. Otherwise, what happens? You spend 7 days in a valuation and the price is not coming, the value is not coming as per his expectation. He will not pay you a single penny. And Warren Buffett defines price is what you pay and value is what you get. And what is the key difference? So in exam, a simple question comes. Fair value is entry price or exit price? If you would have done 113 in days, you will get the answer to this. And common sense wise, is fair value entry price or exit price?
Entry price.
Think, what do you mean by value? What is fair value? If I bought something at 100 rupees, that is the entry price. So will you call it as a fair value? Or if you find that now I will be able to sell it at 80 rupees or 120 rupees, then what would be my fair value?
Exit price.
So it is always the exit price. So fair value is the exit price. What is the main difference between price and value? Price is a fixed term. You have already incurred. It is specific. Value is judgmental and subjective. Value is you are determining. So suppose you are buying a land, you know what is the price you have paid to acquire. But what is value? Value is what you may get it by selling it. And that is the concept of Habu. You have cleared the Index 113, like that class has been covered?
No.
Okay, so once you'll get Index 113, then you'll get an idea of what is fair value and all. So in exam, they're asking very basic questions on conceptual questions.
Simplistically, can we say price is for a buyer and value is for a seller?
That may also not be right because seller is also paying that exact amount to buy it. So price is that point where transaction happens. That may not be a fair value because it may be a distress price. So suppose in case of liquidation, you are under stress to sell. So as a seller will always under compulsion to sell, and buyer will always take the advantage. Because if I know you are going to close the company, whatever price I will give you, you will take it. That may not be the fair value. So the main difference is, yeah, please.
Oh, sorry. Can we say fair value is the exit price in the sense the forecasted market price he would get
Yes.
by after a few years? So therefore,
Yes.
it is an exit price.
That is exit price. Because what is expectation? We are assumption is that whatever I am buying and taking, my intention is not for consumption. Intention is for making money out of selling it. That is the expectation. So price is normally fixed, it's a precise, but value is always non-measurable. That's the main difference. So this probably is a theory you can skip. Valuation, we understand, is a process of determining economic worth of asset or liability under certain assumptions and conditions subject to data available for the date. Now, suppose I did a valuation yesterday of a land and building. I issued a report yesterday. Today morning, either the flood came or the entire building destroyed. Do I have a responsibility to issue an addendum report? Yes, no, maybe.
Yes.
Now you won't have a responsibility. What does the standard says? So international valuation standard says your valuation report and date is for a specific point in time. So if you have given a report yesterday for date of yesterday, whatever happens today, you are not at all responsible because your liability is that till the date you have issued the report. Similar examples, for example, if you would have issued a valuation report as of 31st of January for a startup, so that at the time there were no COVID, no lockdown, you would have given a very high projections and high value. But now the same startup, everybody know what happens in February, March, April till July, it was a lockdown. So now it does not become your responsibility to issue an addendum to the report saying that now the forecast will change, the projections will not hold good, so I want to revise my report. That is not your responsibility. If client comes and asks you to issue a separate report, that's a separate story. But it is not your responsibility because whenever you give a report, it is subject to particular date and particular assumptions they have given. So our responsibility is always still what data I received. And practically where you will face challenges, suppose you are valuing a toll companies or a big infrastructure companies where there are contingent claims. So if as on balance sheet date, there are claims and you're doing valuation and you have assumed only suppose 50% probability of a claim falling on you. So your net worth will be reduced by 50% and you make an assumption. You have issued a report and next day the 100% claims falls on the company because you would have taken a lawyer's report. Lawyer would have said, I will win the case. So still you do a discount of 50%. But if suppose the court gives against your company, so he will have a liability of 100% in his books. But that does not mean I need to update my report that now the court case have come and this is my responsibility. It is not your responsibility. So we need to be very careful till the date. If you have evidences, it is your responsibility. After the valuation date, you are not at all responsible. Now, interesting part is what is value? This term was not defined till 2020. On 1st February 2020, new international valuation standards came and they defined the definition of what is value. So they say value refers to the judgment of value of estimated amount consistent with base of value. So it is clear, value is not a certificate, value is a judgment of a valuer, it's an opinion. And they also define what is valuation. So in 2020, IVS, they defined that valuation means an act or process of determining estimate of value by applying standards. That's the very first time they defined. Is valuation art or science? This question got debated a lot, and they always say, remember in our school times and when we were doing CA, question used to come, is accountancy art or science? So they say if the trial balance tallies automatically, accountancy is a science. But if you tally the trial balance manually, it is your art. So similarly in valuation, it is either science nor art. They say it is a craft. That is a skill. The more you do, the more you expert become at. And our India's Professor Arshad Damodaran, who is Indian national, he is considered as the most highly acclaimed professional in valuation discipline. He teaches at New York Stern University on valuation. He is the authority on valuation. He has written many books. Once you become valuer, not for exam purpose, do not touch his books at all. But once you become valuer, you will find a lot of value by reading his materials, and your knowledge will be updated a lot. He always says, we all are amateurs in valuation. Despite doing valuation 30 years, he says, I failed to value Uber. I never thought Uber could get this kind of valuation. So we all learn by doing more and more, because startup valuations came recently in 2013-14. At that time, nobody was very expert in the world. Our IBBA committee of experts accept themselves that it is an ambiguous concept. One asset can have a different value depending on different purpose or context. That can always change. A funny article came that 12 analysts gave a 12 different valuation for a same company. Only common thing was they charge $500 R fee per hour fee. That was the only thing common. Even our Supreme Courts have accepted in various cases that if different values valuation of a same asset, value will come different. That will not say they are wrong. And Supreme Court will only interrupt when somebody proves that the valuer has done a mistake fraudulently. One of the gentlemen says valuation is what people are willing to pay. And this is very apt in case of startups. If we know startups, they all are into losses. But if you see their valuations, despite not earning a single penny till date, their valuation is going very high. If you see Flipkart, they had a loss of 245 crores. Valuation came $7.6 billion. In 2018, they earned a loss of 2063 crore. How much value would have come? Any idea? How much the valuation would have come after this losses? And this is only for the year, not the reserve surplus total.
100 billion.
That would be too high.
11 billion, 11.
They got $20 billion, despite having the losses increased 10 times. Similarly, if you see Paytm, their losses was 890, 14 and 3,600 crore. Their valuation came 16 billion. Now, the first question, I'll just unmute them. Now, what happened? The chairman of RPG Enterprises gave a classic tweet. He says, if I travel in Ola and stay in Oyo and pay through my Paytm, I will increase losses of all the three companies. Still trying to understand the premise. More the losses, higher the market capitalizations. Perhaps I'm too old world. So a lot of businessmen were also unable to understand how can they are deriving the value when they are having a no profit at all. Anybody has any thoughts why the valuation is going so high despite not earning a single penny?
One of the reasons could be it's a new age company which is into innovation and making life easier for people. That's ultimately this is something which they give a premium to the today we of a better we are able to get everything at home. That's something maybe that's a value for that, which they will maybe benefit over the long run. The companies will benefit in the long run, but the customer is benefiting initially. So they assign a value to this ease of doing business and ease of doing anything.
Okay, anybody else has a different view?
Basically,
it's basically a future expectation. They expect at some point of time this is going to happen, make an income of that level. So that they are valuing today. That is the intention with which they, because all these startups are only with a value after 10 years.
Absolutely. Nobody is doing a charity here. It's a pure business. They expect in future, they will be either a monopoly position or oligopoly position where only two giants will run the economy. For example, Ola, Uber. For example, Paytm, PhonePe. Or take example of Flipkart, Amazon. Ultimately, entire market will be capitalized by only two big giants who can survive. So they're expecting in future they can derive the value. Immediately 1 year, 2 year, 3 years, they will not derive value. Now take classic example of WhatsApp. Why did Facebook acquired WhatsApp? Did WhatsApp was ever charging penny to you? He was not even charging any amount for a user to register or download WhatsApp. It was free. But they realized that in future, to sell the data, you will get the value. And whatever you type on WhatsApp is get a read by artificial intelligence of Facebook. So that's why they are able to know what the consumers will buy in future. So one of my friend who works in LA, he was mentioning that the Facebook representative will go to the big companies and say, I will tell you what the customers will buy in future from your product. So you need to pay me for that. So I will share the information what customers are Googling or they are discussing on Facebook or WhatsApp. That's the way people do their business. So in future, they are expecting. Currently, they may not earn anything. And that is the reason Warren Buffett says we need to understand the accounting numbers are the beginning and not the end of valuation. Because a lot of media gave a negative report that despite having so much of losses, valuers don't know how to value. They've given a higher value which should not be there. So it's a bubble. That's the news they made. But ultimate story is if somebody has a capital for 10, 20 years, if you can burn the pockets, then you can definitely go for long. Take classic example of WeWork. Now, what happened in WeWork? Everybody knows it's a co-working sharing space model, and it became very successful model for long. Then in India, everyone who made a co-working space, people copied WeWork formulas, their data, and did a valuation accordingly. But then what happened? WeWork went down drastically. They almost burned 50% of their capital because of COVID and some other things that are happening. So now you cannot say that valuation which I've done earlier was wrong. If something goes change, your entire number got changed. And it happened, I think it was Flipkart. In 1 year, sorry, it is Oyo. In 1 year, they had 6 valuations, and each valuation had a very high figure than a different valuation. So if they did a valuation in January, they will show, let's say, 100 crore as a revenue. In March, they will show 500 crore as a revenue. So every 2 months, they were increasing their projections, and the value is automatically increasing. So we need to be accept the fact that yes, for 1 year, we can have multiple valuations. Because if the client says, I'm getting so much of money now, I'm getting 1 round of investments, I'll make more acquisitions. So which is practically possible. Now in Companies Act, all sections majority require registered valuer. This list is the tentative list where you all need a valuation. You don't need a valuation for issuing shares under right issue method. under section 62(1)(a), if I'm bringing out a right issue, we don't need a registered value report. Can anybody tell me why government has put such condition that we don't need a valuation report if you are giving a right issue? Why? What would be the logic?
Because no new investor is coming, only existing shareholders are subscribing the share.
So again, my question is why this condition? Fine, agree, nobody is coming, but why they don't want a valuation? Any particular? Why they have given so leeway, which is a very good leeway.
The shares are being given to the existing shareholders only.
As
So
a logic is yes. So the logic they have given is in right issue, every shareholder will get an equal opportunity to take in the same proportion he has. So there is no impact on his individual rights. So if before right issue I am having 100 shares and I have 10%, in the next right issue my percentage will remain the same. It will not deteriorate or impact. So the impact was the decision they are saying, if it is not harming the rights of the existing shareholders, you don't need a valuation requirement. And that is the logic. If you are a 100% holding company and you are merging your 100% subsidiary company, you don't need a registered value report, because if my holding company is acquiring a subsidiary 100%, it will not have any impact on the shareholding rights. Everybody will have same impact. So at times think logically, will it impact or not impact? If it is not impacting, thumb rule is you don't need a valuation. But if it is impacting even 1%, you need to have a valuation mandatory. Take example of director has given a loan and now you want to convert that loan to a shares. So you are issuing shares without consideration of cash. In that case, you need a valuation. Despite same logic, it is coming to the same shareholders. Director is also a shareholder, but government has made a rule because now no new money is coming and you are just changing the liability. So you need to have a valuation report mandatory. So it is it is not an exhaustive list. It's just a minimum list shared by IBBI. So IBBI issued a list that under Companies Act, under which sections mandatory they require registered value report. In India, as we discuss, this is not given by IBBI. This is prepared by professionals saying we think it is required. It is a debatable. IBC was covered. Yeah, please, sir. Sivaji, please.
I have one question. We're going back to earlier discussion we had in the early part of the discussion regarding the purpose of the valuation, and there could be a valuation. You had mentioned that there could be multiple valuations. So that is where in some cases the two different valuation reports could be for sort of a cross purposes. Basically, like for example, in from RBI perspective.
Yes.
If we have to issue shares to a overseas company, overseas company share is being acquired. What happens is you have to generally get the shares at a lower than value than what is given by the valuer. Suppose it is say $1. If the issue comes at 0.90, it is acceptable as per RBI. But if it is, especially if it is a CCPS, but in the Income Tax Act, what happens is that if it is the 0.1. Difference could be taxed in the hands of the investor.
Investor, yes.
So, I mean, in such cases, the company is in a dilemma. Though now the valuer is asked to give a particular value close to that. It happens like that because they don't want something which is plus or minus in the other case. Because it'll be violating two acts.
Yes. This is a practical
such cases,
problem.
To the valuer insist on the valuation done by the other person. How does the valuer attend to this?
Generally, what happens in these cases, company try to appoint CA who is a registered valuer so that his both certificates can work out. So in Companies Act, you can issue one certificate. In similar certificate can be copied in income tax and RBI. So if same person is giving, then probability of getting same report can always be 100%. But if two different valuers are giving, it is very difficult. So nowadays in Delhi, a lot of merchant bankers again, with due regards to them, they blindly copy your report, your assumptions, and give value only 1 rupee or 2 rupee difference, just to avoid the income tax gap. Because investor always have a issue. Investor says, I don't want a income tax impact later on. So either you adjust your valuation report, I will not like to have any impact. And that impact can become material, because it may happen at times income tax. And the problem is, income tax department does not understand valuation.
Right.
They do not understand at all. So they cancel the approaches. We need to be very, very clear in issuing report at times. And one of the things all valuers should aware, do not send signed reports first. Always send a draft report to client to get it vetted from their legal team or their tax team, then issue a signed report. Because what time it happens, you have issued a signed report, then client comes back to you and say, now you change it. So if you change it, you have already taken a UDIN. And just to clarify one doubt, you need to mandatory take UDIN even if you are a registered valuer issuing an individual capacity as a RV. If you are a chartered accountant practicing, you need to mandatory take UDIN. Even though IBBI does not mandate, ICA mandates that. And that becomes a challenge for us. So if I have taken a UDN, I cannot say now I will change UDN. So you need to be very careful in this kind of practice. Send always draft report for client. Now IBCU was done yesterday, right? IBC, you are aware?
Yes, it was done.
Yeah.
Okay. So now in IBC will be one of the important opportunities. In our group, do we have IBC professionals? We have IBC professionals in our group or no? Out of 10 people, is there anyone who has passed IP exam or practicing as IP? We don't have anyone. Strange. Normally IP people do faster than valuation. Because what is the difference in IP? In IP, you give exam first, clear the exam, then do a 50 hours training. In valuation, it is the reverse. You first complete 50 hours training and then give the exam. So a lot of people clear IP faster and first, because you can just go and give exam whenever you want. Now in IP, there is a rule, and a lot of assignments you will get from insolvency professionals, that you need to appoint 2 registered valuers to determine fair value and liquidation value. So in IP, there are 2 things: CRP process and liquidation process. Once the company is going on CRP process, you need to appoint 2 registered valuers to give fair value and liquidation value. Suppose the company CRP process fails. So after 1 year, company will go into liquidation. In that scenario, you need to again appoint 2 valuers. So now my one query is, does it mean 2 valuers or it means 6 valuers you need to appoint? Suppose there is a company which is going into IBC, it has land, it has machines, it has an inventory, debtors and cash. So IP need to appoint only 2 valuers or he need to appoint 6 valuers? What is your view? Those who are only speaking and giving answers or on chat, only they will be marked present for today's session. Remaining all people will be marked absent. So now at least you will speak and at least respond. So my query is, do we need to appoint 2 valuers or 6 valuers? What is your thought process? Prithvi ji has not responded. It is 2 valuers. So you guys will kill my scope of work and business of valuers. So earlier it was a confusion. Should he appoint 2 valuers or 6 valuers? Later on, it was clarified by IBBI. They need to appoint 6 valuers, 2 for each asset class. So if a company has land and building, plant and machinery, and SFA assets, and every company will have minimum SFA assets. Why? Cash and bank or debtors will be mandatory in every company. But it may happen that a company may not have land and building or may not have plant and machinery. But at least debtors and cash at least everybody will have. Bank at least somebody will have. So you need to have a SFA value to value. So answer is now it is 6 valuers, 2 for each asset class. Okay. So now if 2 valuers are giving a value, so suppose a company appointed me, I gave a value 100 and Mr. Shiva gave a value 300 crores. So we have 2 valuations, 100 crore and 300 crore. So what will the IP do now then? What fair value he should take? Any idea? And these are all exam questions. So what I'm asking, so be clear on exam questions. So in IBC, they will ask very simple.
Can you please repeat?
So my query is, we are 2 valuers appointed. I have given a value 100 crore. Mr. Shiva has given a value of 300 crore. What should the IP do now? How he should take fair value? IP को क्या करना पड़ेगा? So Mr. Ashok has said we should take average. So by taking average, we may logically it may looks fine that we are trying to match the bridge. But what does the IBBI says? So IBBI says whenever there is a significant difference in valuation, you need to appoint a third valuer. So we will go and appoint a third registered valuer of SF asset class. Now, please tell me. Somebody saying, so now what does the regulation says? That wherever there is a significant difference, appoint a third valuer. What is the meaning of significant difference? Nowhere defined in the code, but what is practically prevalent? 20% up or 20% down is considered as normal variance. More than 20% will be considered as a significant difference that is practically in use. Now the third valuer has given a value 400 crore. And this is exam question. One valuer has given 100 crore. Second valuer has given a 300 crore. Third valuer has given 400 crore. What value RP2 should take now?
It's an average of all the three.
The third one.
क्योंकि वो सही होगा. Third वाला.
Average of the closest two estimates.
Absolutely correct. So the regulation says take the average of 2 closest value which is coming, and that should be taken as a fair value. Now,
I have a question here.
Please.
Yeah, if the CIRP process goes into liquidation now, it was not resolved. So now again at the time of liquidation, there will be again an appointment of registered values, is it?
Yes, there will be, and very important question and a very good practical question. Now, what will happen in liquidation? In that time, they will appoint a registered valuer again, but that registered valuer will not give fair value at that time. He will only give liquidation value. Why fair value not given? Because you are not running the business now. In liquidation, the intent is to close. So that means whatever possible in selling. So at the time of liquidation, he will only give a liquidation value. And at the time of CIRP, he will give both the values, fair value also and liquidation value also at that time. That will be given. Okay. Now, practically understand, if you are IP, would you like to appoint 6 valuers, or you prefer to appoint 2 registered valuer entities who have three partners of each asset class? What would be your choice?
Just the partners, so that it's easy. Operationally, it's very easy.
So that will actually happen, and it already started. Lot of big IPE entities have made a rule that now we will only appoint those registered value entities which have all three asset class partners with them, because we need to understand IP is a very busy person. He would not like to deal with 6 different professionals. वो मुझे भी फोन करेगा, सुमित रिपोर्ट दो, शिवाजी को भी फोन करेगा रिपोर्ट दो, अशोक को भी फोन करेगा रिपोर्ट दो. He does not have that much time. So he will appoint 2 firms and speak to 2 coordinators. They will do a valuation of 3 separate asset class accordingly. And now this is the reason people started forming RVEs maximum. Whenever you go and see the IBBA website, in 2018, there was only one RVE. 2019, there were only 7 RVEs. But in 2020, we got 26 RVEs because they realized now we will not get assignment on individual basis if you are targeting IBC as a practice or from banking sector. Because now banks are also making empanelments, and bank says we will only give to entities in long run. So it will be a time for future to people to collaborate with SFA and other valuers, and that will be a long-term practice. So an exam question comes in IBC on this, that how do you define a fair value? It will be the average of 2 closest value. One question. Yes, sir.
This third valuer, when he gives the value, okay, if he gives 400, 300 and 400, is there a tolerance given? Like suppose he gives 310 or 320, then will that 310 or 320 be taken, or still the closest will be taken?
It's still the two closest. Then you will take 300 and
okay, it's always 2 closest. So
always 2 closest.
The third alone will not be considered in any case.
No, not at all. Okay. It is specifically given in the rules.
Okay.
And now a question just came yesterday. Somebody who gave exam yesterday on IBC. Within how much time the IP need to circulate minutes of meeting to creditors, COC? Within how much time? Any idea? 24 hours, 48 hours, 96 hours, 1 week? Quickly answer.
48 hours.
So it is 48 hours. So within 48 hours of the meeting, the insolvency professional need to circulate minutes of the meeting electronically to all the members. So they are asking very basic questions, yet memory-based things. So we need to know and read. So mandatory, we need valuation now in Companies Act, IBC. A very positive development happened recently. SEBI allowed in REIT and InvIT trust valuation done by registered valuers also. So either a merchant banker, a chartered accountant, or a registered valuer can do a valuation. So it's a good sign for valuers fraternity. But in generally, SEBI, income tax, RBI, banks is optional, not mandatory. But an interesting thing happening, and which I always say, journey of one section to full act. So Companies Act has only one section, 247. Now a new bill has come, Draft Values Bill 2020, that will make compulsory that for all other acts, so they have mentioned in their preamble that remaining 14 acts, we will ensure that the registered valuer will issue the valuation reports, which will be valid in Companies Act, IBC, as usual, and also under income tax, FEMA, SURFACE, SEBI, black money. I cannot say when this act will be passed. It may take 1 year, 2 years, or 3 years, because a lot of resistance coming from government. But whenever it will pass, it will be a huge opportunity, because the draft bill has already came in April. The comments, public comment section have already been taken in May 2020. That period has gone. A lot of comments have been given. So now government is working on all the comments which have received. When the bill get passed, it may take minimum 1 or 2 years. But whenever it will pass, it will be a huge opportunity for members. They have given a transition period in this, that suppose you have done the training of 50 hours and tomorrow the bill gets passed. So you have not passed the exam, but the bill gets passed. Then what will happen? You will get a 3 years timeline to give the exam in old syllabus and become a registered valuer. And suppose you become a registered valuer tomorrow, and then the bill gets passed next week. Then whoever all are registered valuers under IBBI automatically will be granted a valuation professional status in the new bill. So it will be no harm to us. It will be a huge opportunity. As per the draft bill, the committee says, considering the India size and in various acts, we need 2 lakh valuers. Currently, we have only 3,000 valuers. So it is their expectation 2 lakh. Even if I give a 75% discount, even if 25,000 we assume as a reasonable number pan India, still it's a huge number. In last 3 years, we reach 3,000 number. It will take another 10 years to at least reach 20,000 number. So there will be huge opportunity for professionals once all these acts start accepting the report issued by one valuer. And that is all we are all hoping for in future. Now, valuation date is a basic concept. The date on which you are valuing assets or liability. Can I value 2-year-old date today? For example, if somebody says, give me a valuation as of 31st December 2018, can I do or cannot do?
That's possible.
It is possible. So valuation date can be any date.
Yes, it is.
Yes, law allows you. There is no bar on you. Valuation report date will be the date when I'm issuing the report. But now I cannot say for 31st December 2018, I will issue a report in January 19. So technically, I cannot do a backdating. Today, even if I issue a report date today, that is acceptable. Practically what happens, 2 years back, somebody would have done a income tax transaction. Now, let's say somebody would have done a sale of shares. Now income tax raises a query. So the client can go to a CA and say, give me my fair value as of 2 years back. So you can still issue a certificate 2 years back, dated today. So you can say as on 31st December, what would be the value? Now, what are the premises? There are generally 2 broad premises. The one broad premises are either it's a going concern or liquidation. If I'm doing a value, I need to first determine whether I'm using going concern approach or liquidation approach. So if company is in a liquidation approach, my fair value assumption will be different. In liquidation also, there are 2 approaches. Is it a orderly liquidation or is it a distress liquidation? Orderly liquidation means intentionally we want to liquidate the company. There is no pressure on us. We have enough time to market the asset to sell off. So that is an orderly liquidation. So I may get still a fair value in an orderly liquidation. But if it is a compulsory liquidation where I am into huge losses, IBC has ordered me to close down, then you will follow the distress liquidation approach. UDIN we discussed, it is mandatory for all chartered accountants who are issuing report in an individual capacity as a RV. A lot of people object that why UDIN is mandatory, because we are member of ICI Prime, so it becomes our responsibility. And ICI has clarified in their FAQs that if you are holding a certificate of practice and issuing certificate in any name, any other category, you need to take a UDIN. Practically, this becomes a lot of challenge for professionals. Why it becomes a challenge? Though not quoting me officially, the problem is now CS, ICW and other members, they do not take UDIN who are practicing as RV. So they have the leeway to issue a backdate report 1 month, 2 months, 3 months. But a CA member who's a RV, maximum he can issue 15 days backdate report. So at times clients find it difficult to find RVs who do not use UDIN. So that becomes a little bit challenge. How many approaches we have valuation? a very basic question comes in exam at times. What are the approaches, if somebody can mention?
Market value, income,
Cost.
and earnings.
Cost.
So there are
Yes,
three
Market value,
approaches.
DCF
income,
or
cost.
We have three
PV to book
approaches.
value.
No. That PV to book value is not approach.
Yes, sir.
There are globally there are only three approaches in the world. Kal, aaj kal means past, present, future. Your past is your cost approach. Whatever you have incurred cost in the past. Currently, what is available in the market, that is market approach. And if future is in future, how much you try to earn, that is approaches. So globally, there are three approaches: cost, market, income. We cannot say which approach is best. So standard does not say income is best, market is best, or cost is best. Depending on the nature of item, nature of asset we are valuing, you have a choice to choose whichever approach you want. Before 2017 rules, I can choose any approach and make a valuation accordingly. Now, after 2017 onwards, when I am issuing a valuation report, I need to tell in the report, out of these three reports, these three approaches, which I am discarding and which I am taking. So I need to give a reason why I am not taking market approach or why I am not taking cost approach, so that it does not mean that it is my arbitrary choice. So I have to give a reasons. So I will say, let's say COVID has come, now client cannot give future projections properly, so I'll discard income approach. I will say my company is very small, there is no comparables in market, so I'll disregard market approach. Then I will say cost is the best approach because that is most definite client can provide, so I will take that accordingly. So you need to be very careful in what you're choosing. Also be aware of various methods we have. So in exam, they may ask a question, reproduction method comes under which approach? So try to know the names of various methods applicable. These are the basic methods. There can be more variants to it. So globally, these are used. If you have another methods, we can use that another methods also. But just try to note it down and note the names. Anyway, the slides will be with you. But before going for exams, at least read what are the approaches means and what are the various names of the methods of those approaches. Valuation rules, you are aware. So in valuation rules 2017, it is mentioned that till the time central government notifies, a valuer shall value either internationally accepted standards or valuation standard adopted by RVO. So for your exam purpose, so as of now, central government has not adopted any standard. Only standards adopted in India is by ICAI RVO standards. So ICAI has issued valuation standards. So for exam purpose, should I read ICAI valuation standards or no? Quickly tell me, should we supposed to read or no? You should not read. For exam purpose, do not read ICAI valuation standard at all. Do not read. And why you should not read? You will get confused because in ICAI standards, there is something different. In IVS standards, there is something different. Because this standard is only for ICAI RVO members, not for all 14 RVOs. So why a member of CS or ICWA will read ICAI valuation standards? So for them, only IVS standards are applicable. So you just need to read only IVS standards. Do not read ICAI standards for exam purpose. But once you become registered valuer, we need to follow that standard mandatory. Who has the power to make standards? Central government. Hierarchy of standards is whenever the central government notifies, that standard will become the top standard. Everybody need to follow that. Apart from that, whatever is mentioned in the statute, for example, if we want to do a fair value and income tax says fair value should be only as per rule 11 UA. So that method becomes final method. If there is no method, then you go international standards, else you go RView. That's the hierarchy. Internationally, there are so many standards, but for SFA, IVSC Council standards are the most preferred method, which we generally all use. For land and building, plant and machinery, they have a different valuation rules. I'll quickly rush on what are the major valuation issues. The first biggest issue is bias in valuation. Technically, we all are biased. And Professor Damodaran says, you tell me who paid for the fees of valuation, and I can tell you how much biasness would have come into the report. So if a buyer has asked you to do a valuation, subconsciously you tell me honestly, will you give a higher value or a lower value? If buyer has given you the fees and assignment, we will make positive assumptions or negative assumptions more.
Positive.
So will we value higher or lower?
Or negative. We will go
Negative.
we will have a lesser valuation.
Lesser valuation, despite buyer is not pushing you to do a fudging of numbers, but just because subconsciously you will always do. And it is very difficult to exclude that subconscious part because your interest is linked with the buyer. So now let me ask one question in exam. FEMA regulations you have done, right? RBI regulations have been done yesterday, right?
Yes.
Yeah.
So a question came in exam. Who bears the cost of valuation? Central government, state government, bank, securitization company. Out of 4, what can be the answer?
Who? Yes.
Who bears the cost? Who pays the cost of valuation? Central government, state government, bank, securitization company. I know this question looks as absurd because how can you tell me who pays until you tell me who gave the assignment? And this is the exact question. This is the exact question. So when this question came to our friends, we thought IBBA will be asking on some logics. So we tried to find out the logic. And then we find the logic where this question is coming from. But given this information only, what do you think can be answered? A and B for sure cannot be the answer because they will only take from us. Our choice goes between either bank or securitization company. So it can go 50-50. Still, what is your thought process? Ashok, what do you think?
That the ARC will asset reconciliation company.
ARC, securitization company. Okay. Now,
because
I got to no, your because is wrong. I'll tell you why your because is wrong. Now, first understand from where this question is coming. This question is coming from guidelines on sale of distress assets. So there is a guidelines issued by RBI on how the bank should sell the distress assets. So what is the first line there? Who need to sell the asset? Is it the bank need to sell or securitization company?
Securitization
bank.
The bank need to sell the asset because the NP is in the books of bank. So bank need to sell the asset. Now, if securitization company will get a valuation done of the asset, bank will get a higher value or a lower value?
Lower value.
Lower value, because same logic of buyer. If the securitization company has to buy and they appoint a valuer, the valuer will give a lower value subconsciously. So RBI has made mandatory rule that in case of distress assets valuation will be borne by bank only, and valuation will not tell the securitization company to get a valuation done, because already the asset is under distress. They should not charge for a lower amount of fee. So there are two things I want to put your attention. Rest all can manage. Bias is most important. We need to always be sensitive. And last one, which is important, human error should not be there in touching the data. if your valuation goes wrong just because you put a wrong data, nobody can safeguard you. For rest, all others, you can take calls, because I cannot say what will happen in future. That is future oriented. I can still defend. This is a report of one of the big firms in Mumbai, one of the very big firms. They submit a report to income tax department, and one goofed up they did. And that one small goofed up costed them 42 crore penalty issued by department, unnecessary. Because what happened in this, in the calculation of enterprise value, they had to reduce the debt. Instead of reducing the debt by a wrong formula sign, the debt got added again. Instead of coming value 642 or 632, it became 680. Minus minus became plus. Now you cannot go to income tax department and defend my article has punched the wrong data, because ultimately you are signing the report. So this kind of errors you can never afford to take. You need to be very careful on punching data, because system will only give what you enter, goods in, goods out. Now we can just take 5-6 minutes on MCQs and valuation rules. Then if you prefer, we can take a 5-10 minutes break, because we have extended long time, and then we can cover finance function small. Quickly answer now in 5 minutes so that we can finish questions quickly. If you have not covered this earlier.
8 years.
8 years.
8 years, 8 years.
If you are studying for IBC,
Yes.
those who are studying for IBC, I can expect 8 years as an answer. But correct answer is 3 years.
Oh.
But there is a change. What is the change? In IP rules, they mention 8 years. But in valuation rules, IBB has mentioned 3 years. Now, one of the reason I was mentioning you not to read ICAI valuation standards, in ICAI standards, it is 8 years. If you go to ICAI valuation standard, they say a member need to make record for 8 years. Because any regulator can make any strict rules. IBB has made a rule of 3 years. So be very careful on these kind of questions. Quickly answer.
Valuation, okay. Ethical.
Now, whenever you do not understand meaning of any of the option, ideally that will be the correct answer. That's a free tip I am giving you. To be taken on a lighter note, do not follow blindly. So the answer should be forthright. Why forthright is the answer? Because in the valuation rules, they've written the word forthright. So mandatory read once valuation standard rules thoroughly. There is a 2017 valuation standard as valuation rules. So if you don't have the rules, I can send you a copy, but read that rules once thoroughly. This question, even if you have not read the rules, but if your English is of convent educated, you can still answer this. This question typically depends on your English, not on rules.
Standards of. Here, I think ethics is right.
Service.
Think of English perspective. I'm giving you a biggest hint. It will work from English. And why integrity and ethics does not fit? For a simple reason. So service is the correct answer. Because as a professional, you render service.
Oh.
Right? And why integrity and ethics is not the answer? For a simple plain reason. These are all starting with a vowel. Vowel. I agree they do not render, but still vowel starts with an. So we don't have an there. So ideally it is ruled out. Service. And you always render service. Quickly answer.
Well, you should always make. Skill. Provide competent problems based on.
I'm getting only 4 or 5 answers out of 10 people. Why we are not willing to answer? Remaining people, even on chat. Okay.
So I'll continuously B.
Who mentioned B?
Sundarajan.
Okay. Rest are mentioning A and D.
It's
For sure.
Because
expected
it
to.
says
I agree,
based on
agree,
up-to-date
sir,
development.
agree. I will not, I'm not commenting on it. The thing I'm trying to say, C can never be the answer. For a simple reason, C can never be the answer.
No expectation.
Because there is no expectation and no regulator will put such a rule. I only expect Sumit to study. Then I will say I will not study at all. If you put
Buyer or seller
expectation,
can expect.
absolutely, buyer and seller expect. Now, why the answer is B, why it is correct, and why not A and D? You need to always understand in their law drafting, they always use the word may or shall. They don't use the word should. So in all the valuation rules, you will find the word shall continuously shall. So whenever you read your valuation rules, you will always find the word shall. And in this exam, we always think should always looks better because that is thinking more authoritatively that you should always be updated, but that is not the correct logic. So you need to read rules thoroughly because all questions will be tricky. And if you read once, you'll be able to understand. All answers looks similar, but if you apply logic, think little bit, you'll get the correct answer.
Conduct the valuation independent of external influence. A.
Influence. A should be the answer.
And A is the correct answer for a simple reason. You cannot control external environment. You cannot control external factors. Only the influences you can control. And that influence would be you should not be associated with that person and all blah, blah, blah. And I think we all should know no valuer can charge success fee. Success fee is not allowed in the rules. You can charge low fee, nobody will question you. You can charge high fee, nobody will question you. Quickly answer this one.
Sure. That. Yes.
D.
Working paper is the wrong answer. Written contemporaneous. They say that. What does that mean? That whatever your decisions have taken, whatever judgments you have taken at that time, you are documenting on what basis you are taking the decision. So what is the source of your information? So suppose if I am saying my growth rate will be 5%, how am I arriving this information? Is it my fluke or I have done some study? So I just need to document the sources of where I'm taking a decision so that when my peer review happens, the reviewer can see from where I have arrived the numbers.
The valuers appear.
Cooperate A.
A corporate is the correct answer. You have to be honest, you need to be humble. Otherwise, government authorities will make you humble. And when you receive any notice, you need to respond. So cooperate is only what they are expecting the rules. Yes, I will quickly read.
Provide all information record as may be recorded by the authority. Right. Should be tribunal because it followed by appellate tribunal.
Absolutely common sense. It is tribunal. If you apply common sense, most of the times you'll get an answer. This will be a little bit tough, so let me help you quickly.
The word shall not accept gifts and hospitality which compromise or affects its independence as a valuer.
Compromise is not the right word. It should be either which compromises.
Then it should be jeopardized. If it is not compromise, it has to be jeopardized.
No, then it is undermines.
Oh.
Why it is undermines? Because in the rules they've written, it should not undermine his independence.
Oh.
Normally jeopardize looks the common sense word, but in the rules it is undermines. And we need to understand these rules are copied from UK Bribery Act, majority of the word.
That
so
is
the
the problem.
logics will go, and that is the problem because we've read that English. Last question and quickly respond.
The valuer shall not offer.
And last question in the previous question, why it cannot be jeopardized? That's the option.
Because in the rules they have not used the word. So in the rules they have used the word undermines. So in exam, I will respond only what is written into the rules.
Okay. Okay.
That is the logic.
Okay.
For sure, B and D cannot be the answer.
Yeah.
Why liquor and kickback cannot be answer? Because one, liquor is
Yes.
not a parliamentary word to write into the rules. They will not write, right? You do not give liquor. Or kickback does not sound a good word, though practically
Financial.
now
Incentive,
goes
incentive cannot happen because of vowel. Once again.
absolutely. This is common sense.
Yes.
And why this question came,
Financial.
we go wrong. And when this question came to my exam and a lot of my friends' exam, we miss this word financial for a simple reason. As a professional, we think financial only means income, balance sheet, P&L. But we forgot in UK, the word financial also means the cash transactions. So financial is the
Moreover, it is financial or any other advantage. So when you read together,
yes.
financial advantage, any other advantage, it has to be read like that.
Absolutely. It should be. If you need to read thoroughly, you will get answers at times. But in exam, what happens? What you think looks sensible, because incentive looks easy word. But if you have read question correctly, most of the times you'll get an answer. Now, in the rules, either they come questions on like this, or they come questions on forms. So who fills forms A and how much rupees he need to fill? Any idea? Who need to fill form A with how many rupees? Any idea?
Form A by the individual.
पैसे बताओ.
By the individual, and 5,000 is the fees for Form A.
So Form A to be filled by individual and 5,000 rupees. Form B.
By the RVE, registered value entity.
और पैसे.
And 10,000 is the fees.
10,000 is the fee. Form C.
It is the certificate of registration.
So remember, C starts with certificate. So Form C is a certificate issued by IBBI against Form A or Form B. Form D.
RVO.
How much fees?
RVO.
Fees. पैसा
Fees is
कितना?
1 lakh.
So to make an RVO, you need to pay a fees of 1 lakh rupees in Form D. Form E is for simple है.
Recognition certificate.
E is the recognition given to RVO. So against Form D. So in exam, remember the form numbers, amount, and annexure. So it is an annexure 2. So just remember forms and annexure. A, B, C, D are only forms. It will be easy to remember once you read once. And these are all in the rules of valuation rules. Another question comes on timelines. Suppose you pass exam today and fill the form today, Form A today. Within how many days IBBA should approve your membership? 15, 30, 60, 90. आपने फॉर्म भरा तो IBBA कितने टाइम में अप्रूव करेगा? 15 days, 30 days, 60 days, 90 days. कुछ तो rules. So it is 60 days. On the day of you file the form, within 60 days, IBBA will take a decision to give you a membership or not give you a membership. Suppose you fill the form erroneously, something you make a mistake. In that case, how many days IBBA will give to rectify your form?
7 days.
Note down.
21 days.
21 days.
21 days. Okay.
So if you make some mistake in form, IBBA will give you 21 days. These 21 days will be included in 60 days or excluded?
Excluded?
It will be excluded because you made a mistake. So you cannot push government to reduce their timelines. Now, can it happen? I fill the form today. I pass the exam, 70 marks, fill the form, and IBBA says no, I don't want to give you membership. Any possibility it can happen like this or no? But
Yes,
exam pass kara hai, then what
but
can
if we
be
do not fulfill the basic criteria, then
what are the basic criteria?
like there's eligibility, the member, like for example, the one sir was saying that one girl was not a like she was an MBA from not a recognized university.
Correct.
So MBA in finance from not a recognized university or something like that.
That is one. So it may happen. Okay. If it can happen, then within how many days IBBA should give me notice? If I filled a form today and IBBA decides I don't want to give membership to Sumit, within how many days IBBA should inform me that this is our thought process? Any timelines?
45 days.
45 days. So just note, so in exam they're asking basic questions. If IBBA decides not to give you membership, prima facie, they will give you 45 days notice to give, so that you will get an opportunity. Now they will ask you that tell us why you think you should be granted membership. Within how many days applicant should respond? IBBA given notice to me today. How many days I have left to respond?
15 days.
15 days. So within 15 days, applicant will respond. And after that, within 30 days, IBBA will decide, should we give you membership finally or no? It is IBBA need to decide. Now, what are the various reasons happens where IBBA does not grant membership even after passing? One, you do not fulfill the basic criteria. Now that has been, a lot of cases have been removed now for a simple reason. Now your RVO does your first basic level check, whether you are a CA, CS, ICWA, you're recognized or not. So that is one. But other things which RVO do not check and which IBBA checks strongly. One, what is your CIBIL? If your CIBIL is default, if you have defaulted any bank loan, credit card due going on, which shows in your CIBIL, IBBA will question you. If any criminal or civil case pending against you, then you need to disclose, and then IBBA will question why the case is going on. Suppose an inquiry is going against you in the institute, you are a CACS, ICWA, and some disciplinary committee going on. Even though you have not been convicted, you are still benefit of doubt. It is a discussion going on prima facie. Still, IBBA will not give you till you clear the committee proceedings. So IBBA stuff. Now there is one funny reason IBBA did not give membership to 4 valuers for 6 months. I'll tell you that shortly once we go to that slides particular. I'll explain you so that we won't repeat that mistake again ever. So let me, if you have two choices, either continue session now, so I can give you a long lunch break of 1 hour and 15 minutes or 1 hour and 30 minutes, or we can take a break today. Now, depending on your stamina, what you feel comfortable, I am fine. I will not push you. Up to you, I leave. If your majority goes to continue, I'll be happy to continue. But if you think it is going too over, how many of you have registered for login ID for your exam? So that's a good signal.
Yeah, I have registered.
Anybody who is not registered on NISM till now, or who does not know the process, or we all know the process?
I have a small question.
Please.
I have registered NISM certification login I have, but yesterday I just checked it. I couldn't find this exam. Does it appear? Do we get some certificate from RVO or?
No, it will be there. Examination login will be there. So that exam would be there. Did you updated your Aadhaar on NISM?
I just yesterday only I updated it. I opened it and saw it said.
So maybe what would have happened? What happened that the seats have been closed. Seats are not available for this exam. So at times they have removed the link. But if you try a day or later, you will find the link there. But you will be able to choose the link only once the RVO will give you a certificate. So for the benefit of those who have not ever registered yet, so I'll just explain you quickly the process in 5 minutes. If you have ever given exam on NISM platform like mutual funds, KYC, LIC agency, that login ID will work valid. You don't need to create login ID. But if you're giving for the first time, you can register today. Your login ID can be created. But once your 50 hours training certificate completes, you can upload that on the system and then you can choose the exam date. So how we need to register? You can either go to IBA website, choose asset class SFA, that will take you to NISM website. There you can do it tomorrow also or today also in the lunch also. Once you break early, you can do that also. There you need to keep your basic data ready in soft copy, your PAN, Aadhaar, your picture, your details of your graduations and all. Upload that on this NISM portal. Normally within 3 days, NISM will respond on your email that your login ID is approved with the name and username ID password. Suppose there is a mismatch between your name, Aadhaar and PAN card. And normally those who are from south side, they have a certain name variation in an Aadhaar or PAN or as per your certificate. So if there is a difference, they will take 7 to 10 days to clear because they do a background check from from PAN data and from Aadhaar data. And if it matches, then within 7 days, they approve your name. If it is taking more than 7 days for your approval, just give a call to the call center of NISM center and they will help you quickly. Because at times, if there's a name is too much of variation, because at times a lot of people have a tradition of putting father's name second or grandfather name third, but if your PAN it is not there, so they will ask you to submit a affidavit on a stamp paper of 50 rupees that this is my actual name as per ICA records and Aadhaar and PAN is the same person. So that should not take time, but do that quickly. Now, once you do that, your login ID get created. And once the 50 hours training gets over, you will get a certificate by email from Vijayji's RVO. You can upload that on PDF to website. After that, you need to deposit 1500 rupees. Then only you can choose center. So each city has a different centers. So some city have only one center. So suppose if you are in Mumbai and Delhi, they have 3 to 5 centers. But if you are in Jaipur, we have 2 centers. So depending on each city, how many centers depends on the city. Nowadays, due to COVID, they are not working in a full capacity. They are working in a less capacity. So if you look seats, majority of time you will find struggle in booking seats. Lighter note, I always say deposit 3,000 rupees first. So a lot of people think that I'm expecting you to fail. No, the expectation is not that you fail. The reason I always say deposit 3,000 rupees first, suppose if I only deposit 1,500 rupees and I give exam and I fail, then what will happen? I'll be very excited or demotivated. I'll be demotivated. And there will be a lot of people who would not have tasted failure ever till now. फिर वो सोचेंगे अब तो मैं फेल हो गया, ये तो ईगो इशू हो गया, अब तो मैं पूरी तैयारी करूंगा, let me prepare the full course and give exam. And that day can never come because the course is too vast, too big. You can never complete the full course. And we need to understand one thing. When we did CA, our aim was only to study. Most of the people did not have any other pressure. We just students. That was our only main objective. But now we all are working professionals. Like today, Ramanji is also sitting in office and working. So we all are working professionals. You have a lot of pressure from your clients. So you will manage your home, office, so many things. So exam becomes secondary at your priority. And if you delay the exam, it will always cause a damage. My one sincere advice to all members would be try to fix a date today. That okay, let's say training completes today. Then next 1 month, 2 months, 3 months. If you give exam within 1 month, much better. 2 months still tolerable. 3 months delay, not at all acceptable. Because today now you are able to recall all things what would have been taught in classes. For some time your memory will regain. After 3 months, you don't even know who am I and how do you recall what are the things we have been taught. So it will be very difficult for you after 3 months to again study on a fresh basis. So try to read as much as possible in next 1 month, give exam. And I always say, if you give exam after 1 month, there will only two things that can happen. Either you can pass, and that is what we are all aiming for. And if you don't pass, then the other thing would be you will fail. But being a fail, you'll get two good things to know. One, you will get an idea whether your preparation you are doing is up to the mark or you need to change your strategy to prepare. Second, by spending only 1500 rupees, you will be able to see 100 live questions coming on the screen. You can come to know what kind of patterns are coming now. So at least you have an idea. If you know the animal, it is better to tame it. So if you give an exam, you will get a fair idea how the questions are coming and whether your preparation is up to the mark or not. Earlier exams used to happen daily, but now it happens weekly. So when I say weekly, what will happen? Suppose you are in Delhi. So in Delhi, there are 3 centers: Connaught Place, Gurgaon, or let's say Kalkaji. So one center will have only exam on Monday for valuations. Another center will have only on Tuesday, another only on Thursday. So within a city, I can have 3 days at least, but each center will have only one. Excel is allowed. You will be allowed to use Excel. Normal calculator is also allowed. At some centers, you will not get Excel. You will get either Open Office or Apache. So I have never used Apache, but I recently heard from people who gave an exam last month that Apache is a new software similar to like Excel, but little bit different than functions because we all are habitual for Excel. So Open Office and Access, you can, before going to the center, you can call the center, check out what software they have. So there are a lot of websites available where you can test Apache and Open Office. So you'll get an idea. Now I mentioned the last slide, last point. Do not update on FB, LinkedIn, social media before getting registered with IBPI. Bold, italics, underline. Why I mentioned this? Because what is our human tendency? Once you give exam and pass the exam and you are all very excited, the first thing you do apart from telling your friends, families, and that you passed the exam, you upload on social media. So you'll write on FB and LinkedIn that became registered value today. 4 members did that and IBBA stopped their certificate for 6 months. Any idea why IBBA would have done like this? Is there any harm in writing on website, social media that I became registered value?
It may lead to solicitation.
Exactly. That is what the IBBI stand was. They say you just became passed the exam today. We have not granted you a membership. Your membership will when you fill Form A and we grant you membership. Then you will be considered as a registered valuer. Just by putting on social media without getting a degree from us, it sounds like soliciting business, which is not acceptable. Once you become a registered valuer, you got a certificate from us, you upload that certificate, we have no problem. You can upload on social media, LinkedIn, that this is my certificate, I have become registered value now, I am into practice, I started practice of RV. That is acceptable. Everyone does that. But do not do before you become. Okay, so that we take care. And those members who have kids at their home, who are school going kids, and especially the mothers, if you have mothers in a group, do not ever tell at your home to your kids that you are going to give exam of valuation exam. Because if you fail by default, by any chance, then what is the repercussion? When you come home, you can never tell your son, better study. He will tell you, Papa, you also study because you also failed in a class exam. So it becomes a peer pressure for you. Till the time you don't clear the exam, you cannot scold your kid for studying. So when I cleared exam in 2 attempts, first attempt I secured 59.5, and second attempt I secured 76 approximately. So when I failed in my first attempt, my son did not allow me to watch TV, did not allow me to play any games, because he says, Papa failed in exam, so you need to study now. So that becomes a pressure. And when I earlier in the morning I told you, those who are big four partners, those who are experts in valuation, it took them 4 to 6 attempts to pass. And those who are amateur new joiners, they passed in first attempt. So big four partners never used to tell in exam in office that I'm going to give exam. They just say I'm going for a client meeting, and they give exams. Now in examination center, you will get enough rough sheets you want. You can use those rough sheets for all calculations, but you will not be allowed to take those sheets back at your home. So do not waste time in writing all the questions of exam. So a lot of members waste their time in writing questions, what they're coming in screen, so that when I go home, I have the repository of what questions came in exam. NISM authority will not allow you to take that paper along with you. And once you visit NISM website, there you will find a link of how the exam screen looks like. So it will be approximately like this. This would be probably the size of a screen you will see, and this is the question style you will get. So you will get 90 questions in a boxes. So it will start with first question. These 1 to 90 numbers means you can click on any number and the question will appear in that. So if I want to start with number 20, I can start with number 20. If you want to start with number 90, you just click, number keeps on changing. You can maneuver that grid. So now this is a question which comes from economics. What would be the answer of this question?
RBI
Then we'll
governor.
understand how the finance minister is not the answer. I'm asking.
No,
I'm not telling.
no.
This is the system got. So finance minister is not the answer, because finance minister handles fiscal policy committees. RBI governor handles monetary policy committee. Just a second. I think screen share has not come yet. I think network is having some issue. I'm not able to share the screen. Able to see screen?
No, no, sir.
I think it's not coming yet. Shall we take a break of 10 minutes? In the meantime, system and let's take a break for 10 minutes. प्रॉब्लम है क्या जूम में
हाँ इसलिए तो आया हूँ खेलने के लिए। मैं केला 2 दूध 1 गिलास और खाना भी नाश्ता कर रहा है फिर आएगा तो पत्ता अपने शुरू करते हैं या तो पत्ते बांट देते हैं नहीं याद उसके पीसने की बारी है। किधर रखूं पड़ा है भाई तो पड़े रहने दे।
आपको कुछ अभी खाना है या बाद में उसको बोले नींबू पानी
क्या बज रहा है बता?
लगा दिया उसमें, क्या कर रहा है?
क्या बज रहा है मैंने पूछा, मैंने ये थोड़ी ना बोला कि मैं बजा रहा हूँ। क्या खराब?
हाँ भाई। अभी 1 मिनट। अबे यार बस नहीं
हाँ, तो वैसे ये अपराधी काम हो गया। लाइट नहीं जाए तो बैठे रहो। हाँ, मोरा नीचे है इसमें।
अरे इसमें नहीं होता क्या वो? ये तो
क्या वो क्या क्या कर रहा है?
इसमें भी और उसका ने सारे सम बना के भेज दिए। तुमको पोस्टर बनाने का एक मिनट। क्या फालतू चीज फिर से लगा?
क्या वापस लगा दूंगा? अबे रुक जा, अभी शुरू होगा। अब शुरू। चल पीसा।
ये वाला नहीं है, स्कूल वाला रहता है। अपने स्कूल वाले में साइड साइड एंथम भी होता है।
ठीक है ना?
साइड एंथम
नहीं जानना मेरे को दादाजी आ जाओ
साइड एंथम साइड से बजा
यहाँ बैठे हैं हाँ उधर बैठ जाओ ये वाह
मैं उधर
दादाजी अलग लेवल पे आज दादाजी आप इधर आ गए
लेकिन ये पड़ जाएगा
क्या
मुझसे पड़ जाएगा आज
सोच लेना इसका है
इसको बजाते रहोगे ना
ये बचाए तो उतनी बार हम लोग कोर्ट प्लीज दादाजी आ जाओ यार
बैठे ना फीस पे लेने और फिर आएंगे ना मेरे को क्या है
बोलना तो तुमको है ना
वही तो
दादी के पत्ते देख सकते हो
हाँ दादाजी तुम्हारी तरह नहीं है कहीं नहीं देखते चाहे तुम ऐसे ही करके देखा दे आंखें बंद कर लो हाँ यू उन्हें घुमा के देख लेंगे दोनों दादी और होगी
जो कपड़े वाला सब कारीगर था वही लोग बना देता होगा जैसे कि
सपोर्ट में मस्त है मस्त जगह है आराम से
अंचल से बात करो अंचल ये फोन है इसे अमित का
हेलो
क्या हुआ
मेरा माइक ऑन है बोलते
हाँ
Ashok sir, I think a message has come that the class will join from 1:30 onwards.
Yeah, that's right. Yeah, it's 1:30. Just now the message I also saw. Yeah, correct.
Yeah. I think we have to move out because the class
Log out. Yeah, log out and come back at 1:30.
1:30.
Yeah.
All right. Okay. Thank you.
Thanks.